Anya, turning it over to you and, talking about sort of your just massive global expertise. China has come up specifically a couple of times, and I'm wondering, if you could talk a little bit about, China in the financial inclusion landscape and looking at the regulatory picture, digital payments more generally. Can you talk a little bit about that?
My internet's a bit unstable, so I may go off video, but I'm happy to pick up exactly where Sandy left off, because Perfect. When you're talking about financial inclusion, mobile payments, all of those issues that Sandy was just talking about, China is in the lead. We talk about the tech race with China. In this area, they are just ahead of us. Sandy said that in 2017, something like 22 trillion of transactions were done through mobile in China. Well, last year it was over $45 trillion. That's more than twice as much as when you add up all of the transactions that Visa, MasterCard, and PayPal do. That is just by comparison. So China is clearly in the lead. They've also done, and it's gotten a lot of press recently, they've just rolled out pretty much the first big country digital currency, central bank digital currency, the digital yuan. And it's going pretty well. They've done 6 or 7 million transactions, billions in RMB value. They're still in the testing phase. It's an interesting system that's helped with financial, exactly as Sandy talked about. Many Chinese have bank accounts, and this is one way to get them into the formal financial system. This being China and an authoritarian country, it also has a little bit of a dark side. So there's no privacy at all. All of the data is centrally controlled. And the Chinese central bank now, with any transaction with the digital yuan, has perfect insight into who is sending what to whom. So that means no dodging the capital controls when people are trying to get money out of China. It means that you can discriminate against people if they're not high on this Chinese social credit score. You can surveil them financially, all of those things that in the West we wouldn't really like. But it's moving ahead, and it's moving very quickly. And an important piece of this, the China digital yuan, is that it also allows cross-border transactions, so international payments, exactly what we do here at Ripple, without touching SWIFT or the international correspondent banking system. That is super important, because through SWIFT, the US and the West has basically had a system in place where we can control. If you don't do what we want, Iran or North Korea, you won't have access to the international banking system. People won't bank with you. Well, that is becoming less and less powerful, partly through the digital yuan and partly through other innovations where people are just going around SWIFT because it's slow and inaccurate in all those ways that Monica and Christina are about to talk about in bringing payments out of the digital era. But this is a really key point, because Ripple is really at the cutting edge of this. So you guys should all be really proud to work here. 75% of big global banks, especially US ones, are pulling out of the international correspondent banking system. It's just too onerous. The regulatory requirements are too painful, and people say, well, it's not worth it. Why should I have a correspondent banking pair with Uganda or Ghana or Chile? Why should I bother? And so new innovations like the Chinese digital yuan, like the big payments platforms in China, could take its place. On the US side, what do we have? I mean, if we had national champions in the US, which we don't, of course, Ripple would be it. We could be on the really positive side of this as we start gaining traction. And I don't have to tell you all, because you work here and you help make this happen every single day, but we're designed as capable of disrupting illicit transactions. We do full AML, KYC. We can counter corruption in developing countries, because instead of sending cash, people are sending assets digitally. We're helping with financial inclusion, all of that while safeguarding privacy. And what's stopping us? In the US, I think through no malicious intent, but if you look at the maze of people who regulate people like us, fintech companies, banks, etc., cryptocurrencies. It's very unclear. There's an alphabet soup of US regulators working with this, none of them coordinating very well, and most of them not very well versed in these new technologies or understanding of this global reality that Sandy and I just laid out.